Hello, we hope you're doing well. So today is let me just pause ICT in the background. ICT keeps giving us advice. So now today is just a review of today's price action. This price action was quite interesting, by the way. So this is a 6 to 9 a.m. candle. This is 8 a.m. candle. This is on the hourly time frame before this printed. If I just put my annotations, before we put our annotations, let's go on to the weekly time frame. On the weekly time frame, I told you that we were bullish on this week. So our target was this high. Because we reached our high and we expect the weekly candle to expand higher, ICT tells us that for the weekly candle to expand higher, we expect it to expand higher after it has taken out a level of sell side. We are anticipating a bullish week. But for this case, Monday's trading literally finished all the moves. Look at this week's trading. So this is Monday's trading, and this is Friday. So Monday opened and took out the previous weekly high. Okay. Now this is Tuesday's trading. If we are bullish and we're expecting high expansion, so we are expecting this candle to find support in this daily fair value gap and then to go expand higher. Now that we've taken out a level of buy side, now I can anticipate that, okay, now we can start the expansion. So tomorrow, going on to Tuesday, if we close bearish today, tomorrow we take out Tuesday's low. Remember, Wednesday mostly forms the high or low of the week. Then we can expect the rest of the week to expand. And this week we have news. So going on to today's trade, before I even looked at the charts, I didn't know that I wanted to trade today. But let's say I was expecting bullish price action today, actually. I was bullish on the day. But I wanted it first to take out the previous day's low. However, the previous day's low seemed to be too far. I didn't think we would reach it there. So if I put back my annotations, um, let's go down to the 1 hour. On the 1 hour time frame, when I reached the charts, I looked at the previous day's low. It's right here. This is right here. This was it. Let me just confirm. Yes, which is right here. Right here. Yeah. So going on to the 1 hour time frame, where was price action? Price action was right here. At after we have climbed up, dropped below the previous weekly high, and then displaced above with the fair value gap. So I thought we would expand from here, go take out all this buy side and this buy side. But this gap supported price to go low. However, what happened is that price dropped. Then I got so busy I didn't get involved in it this time. Now I went down to the lower time frame. Now what I wanted to observe is that as the price kept on dropping, I was looking for longs. And if we are bullish, we want to wait for take out the level of buy side, then we can look for longs. This kind of retracement is not I what? It's not worth it. But tomorrow, this is what I'm expecting tomorrow. If this and that, let me just get this trend line. So what am I expecting tomorrow? I expect this fair value gap here to act as support. Then we take out this buy side. Then we can climb higher. And the Tuesday, then Friday. Depends. It's how we've been trading most of the week. But if not, we will see what happens. Now we are watching price action, this level here. Previous day's high, which is in line with the 1 hour fair value gap low, and this 1 hour fair value gap high. So we want to see price action. Does it want to be supported in this level? When we displace through, does it act as support, send us lower? Should we break above this inversion, then we are going to go higher and even fill this gap. We'll start looking for expansion to the upside. Going on to today's price action. Now going on to 1 minute, this is what happened. In the 1 minute time frame, so I was literally early on the charts today. I wanted to be early, but then I got something that distracted me. We saw that market opened, used the previous day's the other 17 highs to go higher. Okay? Which level is this that I have not marked out? Let me just go back to 1 hour. See, these levels are so important. And there's a level I have missed to mark. It seems to be an important level. Oh, this is the consequent encroachment of the weekly wick. When you come to your weekly candle, let me make all this visible on the current interval below. So when you go to the weekly time frame, is the level meaning when you do your fib from this high, this low. Let me just get this. When you do your fib from this, I don't know why this is not the fib. So let's do it again. When you do use your fib, and the fib retracement. The other one, the fib channel. So this one here. When we draw our from the low to the high, we just remove all these sources. I'm only interested in one, zero consequent approachments. And I'm interested in the levels, not interested in the prices. And I'm interested in next thing exit the right. Not interested in the background. Interested in them being black. Line to be red, the rest to be black. It's gonna make a video a little bit longer. So one thing is that these are things you want to take. This is the consequent recruitment of the weekly week. If we go the lower time frame now, I think it will be clear to us. You want to watch price action at this level. This level is normally support price, okay? So you saw how price action bought before the market opened. How we found support. This is your model. This would have been your trade. Before it's fine. So you see, this could have been your trade. And I told you want to buy at the low at the key level or below the key level. Now this was 9:30 open. 9:30 opened. What happened after the opening? Hidden something. Looks like I have hidden some most of the things. About this. Now this one all intervals. Now let's go to the 1 minute time frame. Yeah. Going on to the 1 minute, what happened is that market opened, and this was the first after this placing below. This line or this has been moved. I don't know where this line has been moved. Or this is our consequent encroachment. We don't need it anymore. Now you know where it is, okay? We'll move it. So then this line is what? Oh, we need it here. So what do we notice? That at 9:30 market opens, 9:30 it drops, put in the first presented fair value gap. ICT tells us to watch the consequent encroachment, the lower half, and how does price action act? Price has to retrace higher, retraces higher, which is the consequent encroachment immediately rejects. See the body candles fail to close above the consequent encroachment. This was an indication that we are going to go and sweep all this sell side, the low resistance, liquidity around me, all this was going to go. So me, I came onto the charts and I saw that, and I saw we have displaced even through the previous days 17th high. Then I knew that this would act as support to send us lower the previous day's low. And that's exactly how I traded today. This was my short. My short was immediately we displaced through the previous day's high, and I was targeting the stop loss was going to be the profit was that the previous day's low. Could have held for more, but I entered with one contract, so I would not have taken off some partials. Now let's see the execution. That was my first trade. Second trade was this one. I told you want to be a buyer at the key level if you are anticipating this to be a turning point. You want to buy at this level or below the level. So I bought here, took profits here, and you are anticipating that price will reach here and take out this low, buy more. Now you hold. Yeah. This is the double sweep pattern. But let's see what happened when we go to executions. Yeah. So executions. Let's see how else I can be able to teach you something from here. Now, this is how I traded today. So here I sold with one contract here, after having noticed that we are displacing lower. So sometimes you may have the bias correct, but you don't know when to enter the trade. These are the things you observe. Wait for 9:30 to open. This is 9:30, 9:31. The first fair value gap you are observing as price action is retracing. Does it want to act as support? If it fails and you see it displace lower, this fair value gap, once it is formed, once this candle closes, this has formed a fair value gap. You want to be or looking for shorts and looking for shorts. So this could act as an order block from here to here. It would be a seller here. But if I was virtually active, I would have been a seller from this point when this candle closes here like this. See this fair value gap? Always anticipate the first fair value gap to be a breakaway gap, but your stop loss should cater for it. And you take profit. Because I knew now you're targeting swing highs and swing lows. Where is the liquidity? At the previous day's low was my first trade. Now I saw that trade, market come, it kept dropping. So when I took off my profits right here, this candle, ideally I should have held more because this is not a reversal signature. According to me, I cannot. This shows that price action is ripping through and is going to go lower. When price action reached previous weekly high, I bought. I told you you buy below or near or at. I bought here. Bought here, I exited here. So, and I was anticipating that this is going to be a double sweep. Because when we reached here, we saw this candle literally fill this week. Now I knew that okay, we are coming. Now this candle was very sharp down here. Now, immediately this candle turned bullish, bought more. See this, I bought with 3 contracts. I kept buying this candle as it moving. So I bought more here. I told you want to buy or below the key level. If you don't buy at or below the key level, my stop loss was too tight. That's right here. And I took partial here, partial here. Then I left with one contract. Then I saw the market was going. I bought more, I bought more. I did have a logic here of buying. I should have bought like 4 and held. I've learned that with time. I bought more here again. I just do this. And why am I buying more? Because the market is literally has shown us that we have swept liquidity, market structure shift with the displacement. So I expect from this high, act as support. This week, if you move this week from this point, I expect this to act as support for price to go higher. So that's why I bought, and my stop loss was just below the fair value, the unit is here. This level is weak, and this is a strong support price level for price. That was my trade. I took partials here, but market wasn't moving so nicely, so I totally ranged the boat, took partials here. And that's it for the morning. Now here again, I took partials. I bought more here, took partials here because we were failing to literally go high. I again bought more here. Why did I buy more? Because if we are bullish, SCT tells us that wait for a sweep of sell side, sweep of sell side, okay? 1 minute candle, sweep of sell side once we are bullish, and you go to the 15 or 5 minute second chart and buy the first fair value gap. But I don't need to go to the first fair value gap. I'll just wait for this candle to close and I will monitor the reaction of these candles. For me, I bought long. When you keep watching these price actions, you will notice all this. But up here, we have a new week opening gap on the market here. This is the price action here. When you look at your trading gap, you will see that there is a new week opening gap here. So now, what happened is that I took my profits. Now here, I attempted to buy more. I think I was at the wrong time. Okay, most of the market moved at around 130. So when I bought here, this is the loss I made today. All the other trades were wins, not so big wins, but they were wins. I was not expecting it to expand higher, but then this came. I think I had moved my stop loss to here. And it was a low probability trade, so I anticipated. So my stop loss was too. When you lose, you have to make sure you minimize your losses. When it took me out, I closed my account. I'm done for the day. And then I want you to notice where price action reacted from. When you go to the 5 minutes time frame, okay, you'll notice that if you are bullish, you wait for markets to close above an inversion, which is the 5 minutes inversion. Okay? You are always watching the reactions between the high, the low, and the consequent encroachment. So look at where the body is stopped, just at the inversion of this 5 minutes. This inversion here, okay, 5 minute inversion. And just make it a little bit faint so that it can't crowd our chart. Okay, so you see that that's the lowest point. These are key points to frame your trades. This kind of reaction is enough for you to look for longs. Why? At a key level. If not, you wait. How do you wait for? Wait for closure above the previous days. So we closed above. This one acted as support. Immediately, this candle turned bullish. You would be a buyer here, but I was done for the day. I didn't want to confuse myself anymore because I was literally tired and okay? And your stop loss can always and will always be safe below this week. So that's it for today. Hope you learned something from it. So based on today's price action, and this week I'm expecting bullish price action. So let us see how market and how London opens tomorrow. Ideally, what I want to see going on to tomorrow. Let me just remove this. Going on to tomorrow, this is what I want to see. The 1 hour time frame. I'll be observing how the market will treat this inversion from here to this point. Okay. I want to see whether this acts as support. If we reach this point and we start displacing now with the inversions, then we will target this Tuesday's low. But if we completely fill this 1 hour fair value gap, move this, I use this. If we completely fill, no, I don't need to, then this, I will not go back this because I will see my my journal is this recording for the trades. So these are key points that at a key level you want to buy below it or at. The more you don't buy below or at, market will retrace and take you out and go in your direction. I learned this the hard way. If you look at, let's go back 1 minute and see. See, price action was bullish, okay? But you want to buy at or below the key level. What happens for those who are waiting for confirmation is that bullish candle, they buy here. When you buy here, it comes and takes you out. Now, people buy here, their stop loss are tight, they will take them out. That's why you wait for below or at that key level, knowing the directional bias. Going on to tomorrow now, I want to see, that is one, that this inversion here marked with this. Let me choose this ink to be so this inversion is key. Watch the high, watch the middle, and the consequent encroachment. So, with me, inversion, inversion, high. So, we watch this high and the consequent encroachment, which is just this weak middle here. We want to see, does price action, how does it behave when it reaches the low, consequent encroachment, and the high? If we even fail to reach here and we start to displace lower, then we will look for lower prices. But if we displace higher, feel this inversion here, we have two fair value gaps we'll be watching tomorrow, going into tomorrow's trading. So this one is another one. The other one is an inversion, is also an act as a potential inversion. There are things we'll be watching for tomorrow. But for this case now, we are at or not even at the consequent encroachment. However, we have this order block here. We will also be monitoring the reaction on this level. This level can act as support and even this previous days 17 high. So we'll be monitoring this tomorrow and see what will unfold. If we close above this, then I expect it to act as support, then we can expand higher. That will determine on how Tuesday's trading will work. This is what I mean. If we close below like this, we come and we act as support, then we expand. We buy Wednesday, we buy Thursday, and Friday we will thank God for Friday by selling the model by ICT. I think that's it for today. I hope you review this with your charts and you go back and always review these things every trading session. So that's it for today.